Everybody, welcome to Peter Dellane's Mortgage Show, episode 5. Today, we're going to talk a little bit about credit enhancement. Peter, take it away for us.
Okay, I want to talk about credit, the difference in credit scores, and basically we get there's a mortgage credit score, which I used to call full factual. It probably has a different name, which is a more in-depth credit pull, and it costs a little bit more money. Our credit pulls are over $30. And that's going to give you probably the strongest score there is in the industry because it's got the largest amount of collateral, if you will, tied to it. We get calls a lot where people will say, my credit score is, X, Y, Z, and we pull it, and it's substantially different. So we're going to be different than what we sometimes call a soft pull or a Credit Karma pull, or one of those agencies, because they're not paying for that full type of credit score and the type of credit that we have to do in the lending industry. And it's different even if it's a car or if it's furniture. So you're going to have, regardless of what the pull is for, you're going to have a different score for each one of them. So, and we just had one last night actually, that was off by 40 points. So, it's a good place to start, to call one of those places and find out what your score is. But you definitely want to give us a call and let us pull it, find out where it is. And then it leads us to the next thing I want to talk about is if you need a little help on your score and you don't qualify for the program you're looking to qualify for, we can do what's called in the industry, what we call a credit enhancement. First of all, getting back, when we pull the credit, we pay for the scores to let us know how much we can improve your score for. So, and it's pretty accurate. So, like on the pull last night, we could improve one score. Every repository has a different score, and we use the middle of the 3 scores. And if there's 2 borrowers, we use the lower of the 2, the middle lower of the 2. But when we pull the credit, it'll tell us what we can actually improve it to. So then where it gets really interesting and is the fact that we have banks, or a bank that we work with that we trust, that'll allow us to do what they call credit enhancement, where we put that deal with them and they'll actually report back to us within 1 to 3 days what they can improve that score to and what it takes. And often it is not a lot of money. We did one recently, and Craig would probably know, but I'll get with him in a little bit, where it was very little money, where maybe even $100 or $200 to actually improve the score to get it lendable. So we'll send it to that bank, and then what I'll do is, if I verify that you have those funds to do what the credit enhancement says, I'm going to issue a pre-approval based off of that. That's how accurate that credit enhancement is. So, for instance, if you have like a 580 score and you need to get to 620 or whatever the program parameters are that we want to get you to, and you want to write on a property, and we do the credit enhancement, we know what we can improve that score to, we're going to issue a pre-approval letter because we verified that you have the wherewithal to do that, and that's very accurate. We've only not missed it once by 1 point, and we just went back again and put a couple more dollars on that account and hit it. So, and this is done in 3 days, 1 to 3 days, sometimes 24 to 48 hours, where we'll give what we need to give to the bank, and the bank will actually do the credit enhancement, report back to us, report back to the borrower, and say, listen, you got to pay down, whatever credit card to $150, and then we'll rescore it. And then once we rescore it, this is where it gets awesome, is for 2 things, is we can rescore it and put you into that program while we're in process. And also, if we continue to improve that credit while we're going through, let's say it's a 60-day close or 45, or for whatever reason, our actual settlements are 15 to 20 or 15 to 30 days, but let's say it's 45 days and we can do more to improve that credit, we'll renegotiate the pricing on the loan and get you the better rate even. So that's kind of not out there in the industry, or very uncommon. So you can actually, if you don't have the best credit and we can enhance you, you can actually can go out looking at homes, write an offer, and enhance it in the process and still be moving through like nothing happened. So that's one of the the benefits of doing a credit enhancement. There's some other things I want to talk about with your credit. Is the fact while you're in process, and if I couldn't, we had a couple. We always have a couple of these, no matter how often we tell the consumer that to not have a credit pull, in the process, or to go out and buy anything new, or open up a credit card, because it notifies the bank while we're in process, and it may not affect the credit scores, but it affects the approval process, and it flags it, and we have to go back and explain and figure out what you were doing. And so I guess my point is the event that once you get a pre-approval and your ratified contract, don't monkey with your credit at all. Don't do it. It's just, it happens, and we just shake our heads and laugh and work around it and do what we can. I don't think, Craig, we've ever had a situation where we ever lost a deal before it, but it has made things really interesting. So realtors, if you've got somebody that's on the edge, and they need a little bit of improvement, and you don't need to go out and spend $1,200 to get your credit improved. Just give us a call. Let us have a look at it. We'll pull it. If it's enhanceable, we'll submit it to the bank, get you out looking at homes, and get you a ratified contract. There's a couple things I want to talk about with Craig, is regarding credit scores and how low we can go at certain programs. And we're not going to be exact on that, but Craig's a pretty exact guy. And then also, I want to talk about the compensating factors. Also, like if you're a FHA borrower and you don't have the best established credit, they'll use compensating factors. Now, Craig's going to go over with you what those are and kind of how to keep those in order, like if it's a rental history or whatnot. So, hey, good morning, Craig, and go ahead and take it away.
Great. Well, I guess just to get back on, if you pull scores through some of those other entities, it's a different algorithm and different scoring model. So the score is definitely going to be different, but it is an indication of where we are. Basically on credit, the biggest drivers are obviously paying your bills on time. And the next biggest driver that I see is the percentage of your total allowable credit available to how much you've used. I've seen 100-point swings just based on somebody paying down their credit card bill and that type of thing. So one of the things you definitely do not want to do is open a new account right before you get a mortgage, because it can affect your credit scores. And surprisingly, you do not want to close a revolving account, because it looks at your total available revolving credit available. And if you close one of those, the percentage of what you owe goes up, so it can greatly affect your credit scores. So that's the biggest driver that I've seen out there. Again, I've seen about 100-point swing on that, but Pete was talking about compensating factors. If we are potentially below a 620, say on an FHA loan, one of the compensating factors they look at is a rental history. Another thing they look at is the payment shot from the prior rent versus the new mortgage. So that's a big compensating factor. That's probably the biggest compensating factor out there. Reserves, if they've got no reserves, obviously that's not a compensating factor. If you get 2 months, 3 months, 6 months, those are all huge compensating factors that can help us overcome maybe some hiccups in credit and that type of thing. The third thing, obviously, larger down payment. That's all very helpful as well. So those are the three biggest compensating factors we can use to get somebody with maybe some questionable credit or maybe not well-established credit into homes where they may not have been able to otherwise, as long as they have those compensating factors. So anyway, I guess I'll kick it back to you on that. But definitely, do not, once you applied for a loan, do not go out and buy new furniture. We've had clients do that 3 days prior to closing and caused us to jump through all kinds of hoops to make these things happen. We still closed on time, but it definitely caused me to lose a little bit more hair. So don't buy a new car, don't open new credit cards. And if we are trying to do credit enhancements and all, just specifically follow the exact instructions that we go. Pay down the credit card to $602. Pay this credit card down to $2,150. And then by all means, do not go out there and close a credit card, because that definitely changes the whole algorithm and can have a negative impact on us. So that's some of the things I wanted to chat about it.
Okay, cool. Hey, funny enough, one of the going out and opening up new credit while you're in process and getting very close to close was with a realtor, and I just love her to death and think it's funny, but it does make our life a lot more difficult. So the takeaway also is that if you're a borrower or if you're a realtor and you have a borrower and they're talking to them and they're going to pay down whatever, don't do it. Talk to us first, because you may think paying off those medical collections is the right thing to do to improve your score, which is really probably not the right thing to do. So talking to us, we can have it looked at and then tell you exactly what to do. We're not going to charge you, a couple hundred, 1,200, whatever it is out there to actually have the credit enhanced. So also with the credit, the revolving credit, as Craig talked about, I've been seeing different numbers. It used to be always like if you want to keep the balance at 50% of the allowable, like if it's $1,000 credit card limit, they say to get to improve the scores that you want to keep it at 50. I like to even see it at 40 to 45%. So what that means is if you have $1,000 credit card allowable limit, don't take it over $450. If you have to buy anything, try to keep it at that and pay cash. Don't close it, like Craig said. I'm not going to repeat all that stuff, but the takeaway is realtors, borrowers, definitely talk to us. There's not going to be a fee associated with improving your credit, and it'll make your life a lot easier. If you have any questions, give us a call. It's 410-827-5111, and we'll love to talk to you about it. Have a great day.
Perfect. Thanks, Peter and Craig. Stick around for episode 6 in the upcoming weeks, and let us know if you have any questions or comments. Thanks.